Well, results out from Education and Resourcing Group ADvTECH this morning show a 15% rise in revenue for the year to December to 1.4 billion rand, while operating profit grew 9% to 219 million rand. Headline earnings per share unchanged at 40.1 cents. Joining me to take us through the numbers and the prospects is Frank Thompson. He's the CEO of the group. Frank, thanks very much for coming in today.
Good to see you.
Frank, just going through the numbers, it appears there's a strong showing from education, and that's more than offset a fall in the resources division's profits. But education, by far the biggest part of the business, and it appears to be quite resilient despite the downturn we saw last year.
Well, we would expect that because education is probably even more valuable in a downturn, and people appreciate the worth of a good education in the tough times. There's always been a lot of strong aspirational demand for ADvTECH services, and the rise over the last 10 years or so in the general economic circumstances meant more and more people have been able to access that. That's been no different in the last year, difficult times though they've been for consumers, although there have been some constraints because of affordability. But as you see, still plenty of growth coming through.
Okay, so when consumers cut their spending, education is not the first thing to go.
Indeed, in fact, by and large, the last thing.
I mean, just looking at your education revenue, up 20%, 1.2 billion rand, operating profits up 21%, 231 million rand. So if you'd stripped out the resourcing division's results, this would have been a very strong showing from ADvTECH.
Yes, it would.
I mean, just looking at resourcing though, and obviously we have seen other resourcing companies also under pressure. Have you seen a switch perhaps from permanent to temporary placements during that period?
No, I wouldn't say so. The real issue has been the resourcing business, less than 15% of the total, so important and influential, but not the main part of the business, and continued to have very good results. Good strong profit, good return on investment, positive cash flow, and we've been able to continue to produce the right sort of candidates in high demand, scarce skills areas to sustain those results. But what we have seen is, first of all, companies necessarily cutting back on staff, and also a much longer recruitment cycle. People are taking more care. Sometimes in the corporates, more authority required before an appointment can be made, and such things have tended to mean we've had to work harder to get the same results. And that's what's come through in the numbers.
And just looking at the results, it looks like the second half of the year was far worse than the first half of the year.
That would be correct. We had a very strong start to last year as the spillover from the superb growth rates achieved by the business at the end of 2008 continued for a couple of months, and then the effect of the recession kicked in, and we saw that drop in performance both at revenue and operating profit level. Happily, the good news is that some of our business leading indicators, the number of specifications we're seeing, and the turnaround time for specifications are starting to improve, and we're very pleased with the outlook for that division.
So as we go into the new year, it does start to look a little bit better. I mean, you're niched in a number of sectors: finance, engineering, IT, smaller ones, freight and logistics, human resources. Any particular sector that hasn't been hiring? Anyone that has been hiring?
We've been particularly pleased by the way in which the financial staff have continued to be in high demand, and I guess that is understandable in a recession. If the one thing you can't afford to take your eye off, it's the numbers. In IT, the cycle has lengthened. There's been a reduction in staff turnover, but still a good strong showing. In HR, I think the work that we've done to build that business has reaped rewards in terms of a strengthening of our market position. Engineering has continued stable, but no real growth there at all.
And although we have seen a drop in profits, of course, you do say that the business has remained very profitable. In fact, you have grown your market share during the period.
We believe that to be the case, yes. There are no independent statistics, but our research would indicate that we've strengthened our market position in a number of areas.
Just looking at education, 60,800 students on your books at the end of last year. That's up 31% from the 46,500 you had in 2008.
Yep.
Can you continue to show growth of this magnitude?
We can, but it's important to highlight that the full-time student numbers, which is where the bulk of the actual revenue is earned because they would attract a higher revenue per student, grew by 7%. We also had some large contracts in the adult education and skills division, which brought us high numbers of students in areas that we'd not really been active before. We had a large contract from the Department of Labour to deliver adult basic education and training, which saw some 10,500 students on its own. So a large part of the growth was not perhaps in our traditional core mainstream businesses, but very nice new growth that we have been aiming for, and we hope to be able to sustain that.
And of course, one thing about a private education is you don't want full classrooms. So I presume as you grow student numbers like this, you have to grow your cost base because you have to employ more teachers.
That is true, but one of the secrets of ADvTECH has been our ability to roll out the new capacity, whether that's classroom space, additional seats, if you will, as well as the teaching resources to deliver the courses and programs we teach, is done just ahead of the students. That's one of the secrets of ADvTECH, and we plan to continue doing that. We have a significant investment program going forward that we will be continuing with.
Just looking at some of the other ratios, improved working capital management, operating cash flow grew by 21%. And of course, you had capital expenditure of 129 million rand, acquisitions 57 million, capital distributions of 80 million. You did make a small acquisition, that was the Design School Southern Africa. That fits into the Vega brand. Any other acquisitions you're looking at similar to those little bolt-on companies?
We would certainly be on the lookout for those opportunities. And in fact, we define our expansion program as being one of investment, covering both organic capital expenditure as well as these type of acquisitions. The acquisitions tend to be somewhat opportunistic in that we're not sure which ones are going to become available. We're very fussy about the ones we take forward, and we're not necessarily sure which ones are going to come up right now. There's nothing I can tell you about at the moment. What we do have as well is a well-defined continuing program of organic capital expenditure that will create new seats for students.
Of course, we do know there are problems with the national curriculum at schools, some unhappiness about that. Do you see more people coming to your colleges as the national education system remains under a cloud?
Well, that is certainly not in any way hampering our growth, but I think it is important to say that the national curriculum and the objectives of national education are very sound indeed. We would support them, and I certainly would like to make it clear that ADvTECH sees itself as being part of the solution to the national education objectives of the country, rather than positioned in opposition to the state.
So you think you can work together?
We can, and we are.
Prospects for the current year, Frank?
Our view is that 2010 is going to be a better year than 2009, not necessarily back to a full performing economy. There's still some way to go before, in particular, the individual consumer feels real relief from the conditions of the last 12 months. But certainly our thinking is that 2010 will be a better year than last year, and our plans are being established accordingly.
And you think you can maintain your 100% matric pass rate?
Oh, our staff are absolutely determined on that. No compromise.